What is going on, investors? Back again. Time to take a look at another stock. Really excited about this one. We're going to be taking a look at DraftKings today, ticker symbol DKNG. This company just reported earnings today. As we can see here, I'm recording this during market hours. So this stock is jumping around a little bit, and it's acting negatively to the news of not only the earnings, which we'll get to here in a minute. We'll talk about the revenue. We'll talk about the lack of profits and things like that. We'll go over the balance sheet. There's some interesting stuff here. I think you should hang around for this and take a look. But there was also some negative news on the company as well, and so we'll talk about that. Then finally, we'll jump into the stock chart, see if there's some levels here where maybe we can go long DraftKings if you want to. So first thing I want to say is I have a lot of positive feelings towards DraftKings. I actually had a daily fantasy website that was like informational, and I did this several years ago when daily fantasy was just kind of emerging and kind of blowing up, so to speak. And so I made a lot of money off of DraftKings, referring traffic to them and things like that. So I got a lot of positive feelings towards DraftKings. But the reason why I say this is because a great investor puts all of that aside and lets the information dictate whether or not they're going to invest. A rookie investor, a novice investor, an amateur investor just says, hey, I've played on DraftKings, I'm going to buy shares of the company without looking at the balance sheet, without going through the financials, without factoring in other things. They just run out and buy shares. That is what an amateur investor does. So that's not what you want to be. You want to take a look at the company from a critical eye. That's what we're going to do today. $11.9 billion market cap. When we jump into the revenues, we'll see how reasonable that is. Now, I told you that this company had some news and it was negative, and this is really bad, I think. So we got IRS looking at taxing daily fantasy fees. So that's a problem. That is because sportsbook have been paying this tax, I guess, for a while now. There's a link to this IRS memo here, and I actually read it. It didn't read very good. It basically concluded that, yes, DraftKings, FanDuel, all the daily fantasy sites have to pay this tax, and they're not doing that already. So that's another fee that is probably going to be layered onto this business, or likely to be layered onto this business at some point, because I don't know if you've checked the United States balance sheet lately. It's not flush with cash, so to speak. So moving on to DraftKings statement of operations, we'll put aside the negative news. The other thing I want to talk about DraftKings just really briefly before we jump into the numbers, this going to be a press release company. They're dealing with the government. They're dealing with state government. They're dealing with taxes. They're dealing with regulation. So they're going to have some ups and downs in that. And so, you just got to factor that in if you want to invest in shares. There's going to be some roller coaster rides. There's going to be some tummy aches. There's going to be some exciting days. So that's just something that you want to keep in mind. Now, we've got 3 months ended here. Again, these are hot off the tape. These came out today, I think pre-market. So we've got 19 here, 20 for the last 3 months. I'm going to focus primarily on the last 3 months because we did have some sports played over the last 3 months, whereas the last 6 months includes a fair amount of time where we didn't have a lot of sports being played. Revenue came in nicely. We came in at $71 million. These are in thousands. So this is 71 million with an M. And that had compared relatively favor to the previous period when everything was all good. So they actually did a nice job in the quarter, in my opinion, when they didn't have sports being played during the whole quarter. And it certainly was kind of a weird time. They did a nice job. So, but our cost of revenue got messed up for some reason. And what I would do is I would really dig into this 10Q here and figure out what happened here, because we spent 17 to make 57 and we spent 47 to make 71. And so something's a little out of whack there. Our gross margins ticked down actually pretty considerably, it appears, in the quarter. That could be a one-off thing. It could be something that's permanent. I don't know. And certainly if you start layering on taxes like this in the future, it's definitely going to mess with these gross margins. Sales and marketing came in pretty high. Take a look. We spent 29 here and we spent 46 here. If you just add cost of revenue and sales and marketing, you exceed revenue already, and we haven't gotten to product technology, which ticked up nicely. And then look at this, G&A, everybody's favorite expense line. We went from 26, we quadded that basically all the way up to 107. So there's the life of a public company. You got to hire attorneys and secretaries and accountants and all kinds of suits and ties and things like that. It costs a lot of money to be a public company, so we're not seeing that efficiency yet. I'd like to see see that cost level out. Look at that. For 6 months, we did 146 and we did 107 in the quarter. So that accelerated rapidly. We've got a loss from operations here of 160 million. That compares very unfavorably to the previous period where we did 29 million loss. 6 months, if you want to stretch it back there, we lost 226 compared to 58. So this is a company that has losses accelerating, and it's not good. Again, from a net income perspective, it's not good. Let's zoom up to the balance sheet. This actually paints a little bit different picture here. We've got cash and cash equivalents here of 1.2 billion. That's really favorable considering we had $76 million in the previous period, or actually just in the beginning of the year. So going public or tapping the public market, so to speak, as DraftKings did through their kind of like merger going public, well, that really helped the company out because they've got a ton of cash on the balance sheet. They've got this cash reserve for users. This is actually kind of an interesting one that I would monitor going forward. Okay, we went from 144 down to 132. I know it's on the asset side, but this is obviously cash for users. And so I think you probably want this going up. My guess is this is cash held inside users' accounts. And so obviously without sports being played, customers probably pulled their balances back or didn't need a big balance on the site. So it'll be interesting to see how this trends back up as we move into NFL football season, which is traditionally like a really big time for DraftKings and other like gambling, sports betting kind of things. Total assets, our current assets, we've got 1.4. We've got 2.5 in total assets. That includes a lot of goodwill and kind of intangible assets. I think you can give them credit for it a little bit. Look how much this stuff ticked up, though. I think you can discount this a little bit, but even if you do, they have quite a bit of cash. You can discount the cash for users, although I think it's balanced off on the balance sheet here. So they've got a lot of assets. I think more impressive this, let's come down the liability side. Do you see a lot here? Neither do I. We've got total assets here. Total liabilities here. Total liabilities at $324 million. That is pennies on the dollar, considering they got 1.2 billion just in cash. And then again, some of these liabilities, I think, are user deposits that are balanced out here on the balance sheet. So this is a crystal clean balance sheet. So while the statement of operations didn't look great, some of it has to do with where DraftKings is in their maturity as a company. Some of it has to do with sports not being played. It wasn't the best quarter, and I think stockholders and shareholders are kind of punishing them for it. The balance sheet is crystal clean, and they should be able to survive at least for a period of time, losing rather large amounts of money. Although again, we're coming up into the NFL season, and so while they might not lose a bunch of money, maybe the losses start to pair. That's definitely something I would be looking at. Now I zoom down here to the cash flow statement. We pulled down our net income here. This is for 6 months ended. We lost 57 in the previous period. We lost 230, but we add back some things like stock-based compensation that's not cash. Again, this is all, you can kind of look at this all with a grain of salt. If you're not going to pay your employees with stock, how else are you going to pay them? Probably with cash. So there's a lot of people that look at these things differently. Okay, depreciation and amortization is not necessarily a cash thing, but it is something that does exist. So it just depends on how you want to look at these things. Either way, we lost $135 million cash flowed out of the business, operating the business during the last 6 months. That's a disaster considering it was only $40 million in the previous period. We see where all the cash came on the balance sheet. I talked about how they had $1.5 billion in cash. Take a look. Cash flows from financing activities right at $1.5 billion. Where'd it come from? Proceeds from recapitalization of these shares, issue of warrants here. We've got proceeds from issuance of Class A stock here. So here's where all the money came from. Okay, don't be fooled. The balance sheet did not get flush with sports betting. It came from issuance of stock and warrants and things of that nature. Again, not criticizing DraftKings, just want to make you aware of how the balance sheet got in the position it's in. Let's jump to the stock chart. The stock was in a defined uptrend. It went I think it had like a reverse merger. I don't think it was a SPAC. I think it was a reverse merger or one of those. And so either way, the stock went on a monster move, made highs up here in the $45 range, broke trend right in here. This was just about about 2 months ago, broke trend right in here, and now I think we're going to be in this range here. I think that's where, at least this is what I see the company doing. Obviously with the NFL on the horizon, things like that, if the NFL for some reason got canceled or things like that, then you could throw, I think, this range out the window. But in my opinion, this stock looks like it wants to bounce around in this range. We're right in the middle of it here. Personally, if I wanted to buy shares, I'd be down here at 30. I'd like to buy closer to a bottom of a range. Then obviously a top of a range is 38. Got a little bit of upside if you can get those shares down at 30. Whether or not you get there, I think you're probably going to need a little bit more negative news, maybe related to sports, maybe related to government regulation. I think DraftKings is exposed to both. And so it's something that you want to keep in mind. But this is a company that is making lower highs. We made a high here. This is lower. This is lower. This is lower, and so that is a downtrend that we're in, but I think you'll find some support for shares when they hit this $30 mark. Might be a psychological point, but we also had some kind of reversals of the stock, and we also had kind of an initial upswing at the stock at these levels as well. So personally, that's where I would look to acquire shares if I wanted to buy DraftKings. Personally, what I'm going to do with DraftKings is just take a look at it, watch it, put it on my watch list. It's already been on my watch list. I want to see how these revenue numbers come in. Okay. I want to see the effects of a full season, or, a more normal season of baseball, more normalized basketball. If NFL gets played, I want to see how these revenues tick up. I want to see how these gross margins hold up. I also want to keep an eye on some of this regulatory challenges that they'll certainly face. If I miss this stock, it trades in this channel. Typically what happens is stocks get in this channel and then they want to pop. They either want to pop up or they want to break down. And your guess is as good as mine which way this one will go. But either way, if I miss it to the upside, I'm not worried about it. If I'm long DraftKings and they start proving themselves, I have no problem buying shares up here at $44, $45 if it seems like it is worth it. And not to mention, if the stock breaks down, it might make the valuation even more reasonable. Okay, we have an $11 billion valuation. For 6 months, we did $159 in revenue. That's, again, in a tough backdrop. Let's just give them credit for, call it, $350, $400 million in revenue. If things were a little bit better, then maybe, okay, you take a look at this $11 billion valuation, $12 billion valuation. It is rather hefty, but this is a company where if they can continue growing, I mean, we grew pretty nice on the top line here. If we can get this close to $1 billion and this valuation stays close to 11 or 12, you're only paying 11, 12 forward on sales. That's not bad for a company that has a leading market position, in my opinion, in the sports gambling kind of daily fantasy and sports betting type of business. So there we go. That's DraftKings for you. We see it selling off here. We'll see what happens with this stock. For me, I have positive feelings about this stock, but these financials don't look great to me. I think they're going to have to do some more fundraising. I think they're going to lose some more money for a long period of time. I don't know how patient investors are going to be with this company. We are also not 100% sure about the NFL. And if the NFL season is disrupted by any margin, that is definitely going to negatively impact DraftKings. And personally, I don't like to gamble like that with my investment money. I'd much rather just go onto DraftKings if I wanted to do that type of activity. So there we go. That's DraftKings for you. Leave me a comment. Tell me if you agree, maybe you disagree. Hit that subscribe button if you like what we're doing here, and maybe that like button. It really helps the channel. Just want to thank all of you for helping the channel out. I think we're up over 20,000 subscribers now. Appreciate it. We'll be back again soon. Good luck with your investments.